Welcome to a unique showcase of professional trading mastery, featuring none other than Lan Turner, a master trader and mentor known for his exceptional skills and strategic acumen. Today, we're delving into a live trading session that brilliantly exemplifies Mr. Turner's renowned Christmas tree strategy, a sophisticated approach to dollar cost averaging. In this segment, we spotlight a trade that, while not yielding a substantial win, stands out as a testament to expert trade management. This session wasn't about capturing a huge profit. Instead, it was a display of how to stay afloat and succeed even when the market veers off the expected path. Mr. Turner, with his unparalleled expertise, navigates a situation where the market moves against the anticipated trend. This scenario is far more enlightening than a straightforward winning trade. It's a real-world demonstration of risk management, strategy adaptation, and the ability to maintain profitability under challenging conditions. Observe closely as Lan implements the Christmas tree strategy, a nuanced form of dollar cost averaging. Notice how each decision, each adjustment, is meticulously calculated to align with the evolving market dynamics. This is not just trading, it's strategic orchestration at its finest, a skill that no computerized trading bot could accomplish.
Do a scalping trail, see if it wants to go. If it doesn't go, we'll just get out another small loss, but you got to give it a shot. And you know what the Christmas tree is? Let's come in here and play the Christmas tree. It's Christmas. No, it's not Christmas. Or Thanksgiving. Can we trade the Christmas tree on Thanksgiving? Here's the Christmas tree. I'll show you what it is. It's a dangerous strategy, but it's fun. Works really well when it works, but doesn't work so well when it doesn't work. Just like anything, I guess. Okay, here's a Christmas tree. We're going to come in here and we're going to put, oh, this thing's already breaking to the upside. I'll show you the Christmas tree anyway. Christmas tree, we start off buying one right here on the 50%. If the market comes down, touches 50% on that Fibonacci retracement, we get in. Put a little bit limit order down here, another one on the 61.8, and we put another one down here on 78.6, and we put another one down here on 100, and then we put a stop for quantity 4 down here in case we're completely wrong, get blown out. So the idea is that as the market comes down and touches these, boom, 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 we add on, create a bigger position. Because if you come in here and you drop in 5 contracts or 4 contracts right there at the 50% retracement, well, what if it doesn't rebound and start going up with 5 contracts? Well, that's a pretty nasty loss if it keeps coming down, right? So rather than going in with 5, you go in, or go in with 4, you go in with 1. And then if it comes down and tests this other low right here, this Fibonacci 61.8, you put in another one at 78.6. Oftentimes I don't put one in here. This is a little bit aggressive. So we'll put our stop. If it breaks down here, just breaks out, comes down and tries to break all-time new lows. That's where we're just like, we pull out. We're just like, oh, it's supposed to rebound off of these numbers. It's not supposed to come down and break them and come on down. So, but that gives you a reduced loss. You're not losing as much money, right? Because if you'd have got in with, let's say, 3 contracts right here and let it come all the way to 78.6, well, you'd have lost 205 times 3. That would have been $600. Sorry. So $600. But this case, you'd only lost 200 here. And then the next one, oh, grabbing the wrong tool. The next one would have only been a loss of $125. And then the next one would have been only a loss of $110. So, or 200 in that first one, because I'm not adding them together. So 210, and then this one would have been a loss of 110. So you get the idea. Now, when the problem is when this thing comes down and touches these, the problem here is that it dollar cost averages you in. So a more advanced strategy would be to come in and make this one be 2, right? Because now you're going to dollar cost average 50%, and then you would make this one 4. Because, oh wait, not 4, 2, 3, you'd make it 6. Because you're going to be in with 3 and you need to double it, so you go to 6. And then that means your stop would be 6. So you'd be in with 6. No, wait, am I doing this right? No, I don't need 6 down here. Lan, get your shit together. I'm in with 3, so I only need 3. Okay, so we add 3 more right here. And that point you'd be in with 6, so your stop would have to be 6. 5, 6. There you go. I think that's right. Check my math. So 1, 2, then you're in with 3, you add 3, then you're out with 6. So that would be a Christmas tree. So we trade the Christmas tree. Let's leave that baby on there. I'll tell you, the other side of this is called Balaam's ladder. Balaam's ladder. So then you do it the other side. You say, well, what if we have a Fibonacci projection? Okay, so this market came in. We grabbed the Fibonacci projection tool. Let's get this thing big as we can get it. All right, so this is Balaam's ladder. So what if you think this market's going to fall? So you come in here and you start doing limit orders to the upside. You start off with them at the 50% level right here. You take a short position. You take another short position up here, 61.8. I haven't got 78.6 on here, but we'll put it right here at this even number. We could put another one up here at 100. You could go up here. You could get crazy with Balaam's ladder, right? So you could say, we could do 1, 1, 1, 1, 1 all the way up the Balaam's ladder. We call it Balaam's ladder because there's no top. Markets can keep going up to ever. You'd think it would be down, right? Down would be you're going down into hell with Balaam. Balaam's the devil, right? But no, because limit orders are red, you have to sell, and there's no top. You can go forever. Okay, it's an endless pit to heaven, to hell. Well, the thing is you're selling, and so your orders are red. So it has to be, red is the devil. You can't have green. That's the Christmas tree. I know it should be green on top, should be red on bottom, but you're not. You're selling, so you have to be red. So that's why it's Balaam's ladder. And then this is the Christmas tree. So you're building a green Christmas tree to the downside. You're building Balaam's ladder to the upside. Now, Balaam's ladder, we could do the advanced version and not do 1, 1, 1, 1, 1. We could come in here and we could do this one. We would do 2. Oh, actually, you know what? When we do this, we don't have to get that aggressive. I could do like this. So we do 1, 1, and then this one is 2, right? Yeah, this one is 2. I get my reversals number screwed up with Balaam's ladder and Christmas tree. So that's 2, and then we could do, let's delete that for now. Let's bring it down here. So at this point, we could put in another limit, which would be, we'd be in there with 4. So now we only need 4 contracts. There we go. That's a better one. Then we want to put this right here at this, breaking this new low right down in here. And then we'd be in with 4. Okay, that's better Balaam's. That's a better Christmas tree. So you go 1, 1. Now we got 2. So now we have to double it. So that's why we go to 2. Once we double it, we got 4. So now we have to double it again. So now we're at 4. So that means we'd be at 8. So that means our stop has to be at 8. And we've given ourselves one more leg. And we're going to put this one down here just below that even number of 1690. There, that's a proper Christmas tree, Lion. That's a much better Christmas tree. Okay, let's go do Balaam's ladder. He's going to be the same way. Balaam's ladder is going to be 1. And then we're going to come in here. And we're going to leave 1 there. And then that one's going to be 2. Okay, we just took a long position on the Christmas tree. So this would be 2. And then this would be, because then we would have 2, 3, 4. This one would need to be 4. That's not going to let me do it. I haven't got enough money to do that many. Can't do both the Christmas tree and the Balaam's ladder at the same time on the Russell with only $37,000. All right, so we caught 1 long, so it came down, touched our 50%, started to bounce. We're up $60. And what you really want it to do is you want it to come down and pick up 2 or 3 of these things and then rally, right? So that would be your ultimate goal. You want it to kind of come down, turn, and rally. You got to be kind of bullish on the market. Otherwise, this strategy is going to kick your hiney because it just keep on coming down and you get stopped out. But you get stopped out with a less loss than if you let, what is this, 8 contracts run all the way down to the bottom, which you wouldn't do anyway. You're not going to do that anyway. So it's all a game. Just different strategies. Like playing chess. It's like playing chess. These are different chess strategies. Okay, come down and pick up 1 more and then turn and go back up. So then you pick up 2, then you pick up 4, and then you can turn and rally like crazy. Playing Christmas tree and Balaam's ladder. What do you guys think of that? What do you think of the Christmas tree, Matt? There, now we got 2 long, so now we want markets to turn around and go back up. How far down is it going to come against that Fibonacci before it turns and rallies? Fibonacci set in there. Okay, we're at we just hit the 61.8. So that's where we like to see markets turn and start to go back up. There we go. We're up $115. Now it's pulling back down. It's going to come all the way back down to 78.6. If it comes down to 78.6, I start getting nervous because markets aren't supposed to pull back that far on a Fibonacci retracement. They're supposed to only pull back to 61.8 and then turn and go back up if they're bullish. It's a bearish market that comes down and breaks the 61.8 and goes down to 78.6. Okay, so we want it to bounce at 61.8 and rally. So we got our two positions in with a 61.8. We're up $185. If this is at this point we could say, I want to reset my Balaam's ladder. You could put a stop in right now at break even. You could just pull your stop to break even and anticipate it continue to rise. If it comes down and breaks that one more time, it's probably going to go down to 78.6, and that's going to make you have a drawdown into quantity 4. And then it starts getting nervous. And you start getting a little bit nervous. But now we got 2. We're long 2. We got our limit in there. We're up $200. If our goal is 5, and we don't need all this Balaam's ladder in here anymore. We can just dump these things out. We could come in here. We could add our OCO. I'd put a stop in there, but we put our limit in here. Let's say our goal for the day is $500. So it only has to go up to there. And it's coming back down. It's coming back down. It's not being bullish. It's not bouncing that rebound. The question is, do you want to just get out once it touches your entry and wait and let it drop down some more and try and catch it going the other way? Or do you want to let it go down and pick up that buy 2 limit at 78.6? That's the question you have to ask yourself. Do I believe it's going to go down to 78.6, pick up 2 more contracts, and then take me long with 4? Because now I'm losing money because I was up $185 and it was going in my favor there for a second. It spiked those 2 green dots. Could be coming down just to take everybody's stops out right here who got in at the 61.8 and started to run their stops up underneath the market. Or it could just keep coming down. Nobody knows. Nobody knows the trouble I'm in. There it goes, flushing down. Okay, we'll let it go and see if it wants to touch that 78.6 and then turn and rally. We may get our Haney handed to us if it goes all the way down to cell 8, the full Christmas tree, the full Monty. Sometimes I start my first entry at 61.8. That's, different strategy. You can start at 50, 61.8. If the problem is, if it comes down, you put your first order at 61.8, it comes down to 50, just misses your order and takes off and goes back to the moon off of the 50%. So then you're like, well, that's happened to me often enough that I think I'm going to put it up 50. And then you put it at 50, and by the time you get 61.8, you're already up to 2, and then it goes down to 3, and then 4, and then 8. And by the time you get to the bottom, you're 8 contracts instead of just 4 contracts. So it's the Christmas tree. If you do this double up Christmas tree, it moves. It can get you in trouble really fast if you're not on top of it. Okay, we're back into green again. So if you're nervous and don't think this thing's going to turn and rally, you could just put your stop right at break even right there and just get out and then reset it at start at 61.8. Or you could do 1. Well, we're long with 2. If you want to reset and roll, you roll your Christmas tree. You could take 1 off, leave 1 on, reset your Christmas tree to start over at that level so that if it comes down, it's not doubling up 2, 4, 6, 8. You're just starting over with 1 again. Of course, if it takes off and goes, you're only in with 1, not in with 2. And then you make more money if it goes right now, but you lose less money if it doesn't. Bigger risk, bigger reward. Bigger risk, bigger loss if you're wrong. Where do you feel more comfortable doing what? What do you feel? It's being stupid right now. It's not going. I kind of wanted it to go a little bit harder, a little bit stronger. So we could take 1 off and then reset because it looks like it wants to come down some more. We'll see. It's bouncing around here a little bit. We take 1 off. So we're only long 1. That means I'm going to reset this is here. We'll be a little bit cautious here. It's being stupid. So we're going to be a little bit more careful. So we're going to put it at 78.6. I'm going to put it inside of 78.6 so it doesn't have to come all the way down there. And it comes down and tests the previous low. That's our stop. We'll get rid of those for now. Edit. We're going to come in here and bring this down. So we'd only be 2 at this point. So we roll. This is called rolling. We're rolling our Christmas tree because the market's showing bearishness. This is the drift. This looks like to me a drift. So this is the pump. This is the morning bell right here. So this is the morning bell. We then got a pump. A pump is where you get a nice run like that. And that gets lots of people excited about the long position. They start buying in. Buy, 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 buy. Who's selling to you? The big banks. Banks are selling, 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 selling. Now the big banks think the market's going to go up. That's why they pumped it. So now they want to buy a whole bunch more. So this is the drift down. And this is where you get lots of choppy downside. So you usually get a big choppy downside. And then once you get a choppy downside, sometimes you'll get the Wyckoff spring, right, which breaks this previous low. If it breaks that previous low, it comes down there to stop everybody out who was taking long positions like we're doing, trading the Christmas tree. And then they take that out, and then they go from there. And then it usually goes like straight up because this is the accumulation stage. So they pump it, they accumulate it, and then they run it like mad. And usually this is where we get our run. Let's see what happens here. We're long 2 again. Good thing we rolled it. Come on, baby. We want this thing to go up. And it's just drifting down. All the choppiness to the downside gives me confidence that we're going to get a rally, a strong rally, because the drift, it's not real excited about going short. Keeps all these little attempts to go back long, and it wants to go long, but something's pushing it down. We might just get our hiney handed to us today. We took a second one at 78.6. This one here is 2 down here at this bottom. So we would be 4 on the Wyckoff spring down in here, which I don't really like to do. We'd have to take a 4th one right here on this even number of 1690. If I'm going to play the Christmas tree, I like to do it on the micro minis because you can end up with a lot of contracts sometimes when you're wrong. The micro minis are a lot more forgiving, but the bigger markets pay off a lot bigger when you're right. So it bounced that 78.6. There it goes. Now it's starting to go up. You could roll again right now. You could take one off and you could say, okay, we're going to roll. So we put one at break even. If it takes it off, we take one off. But now we want it to go with 2. Go, baby, go. Rock and roll. Push it up there. But if it comes back down, fakes us out, we'll take one off. We'll roll the whole Christmas tree back down one more time. All right. So now we're only long 1. So that means we have to change our Christmas tree. This is 1. Roll our Christmas tree. This is 2. This is 4. Where's it going to turn? Where's it going to roll? Where's it going to go up? Let me come down and take us long one more time. Really choppy drift on the way down. What's it going to do, guys? John Mackey thinks this is a great idea. He likes this strategy. It takes a little bit of practice. Practice it in your demo account. What are we going to do right here? You don't use a lot of stops when you're trading not a lot of false starts when you're trading this market. So, or when you trade this strategy, when you trade the Christmas tree and you trade Balaam's ladder, you don't use a lot of stops. So you don't get stopped out a lot. So there's less commissions you're paying too when you do it this way, but it can catch you. It can catch you. It can eat you. You got to be careful because if it just never does turn around and, one up for every down and it just keeps going down more than, market can stay irrational longer than you can stay liquid. And that's the problem with this strategy. The market can stay irrational longer than you can stay liquid. We are expecting a rally and it's just not coming. It's not coming. It just keeps coming down, just chopping. We need it to rally. We need a bullish trend in here. We need something to push it higher. You're on the mini. Man, look at this thing still pulling down. Okay, we're going to touch one more. Touch it, take it. Oh my goodness. touch it. Take it, take it, take it, take it, take it. I can't tell you how many times I've had the market come down, get that close, not take it, and turn and go back up. And so then I was like, all that work for one contract. Okay, now we got two, and we're coming down testing the previous low. Come on, you dirty market. We need a rally out of here. Okay, let's turn and go now. Now you can go up all you want. Go up all you want. Come on, little Russell. Get on your tricycle and pedal, pedal, pedal. You have to talk to it, man, because all you can do now is be a cheerleader. So once you place your orders, you make your decision, and you got your order set, all you can do is cheerlead, Bruce. Just yell at the market, swear at it. This is where you get all your frustrations out. Come on, you rotten piece of crap. Come on, little Russell. All you can do is cheerlead at this point. I hate going into Fridays with a big loss. Damn it. Ruins the whole weekend. Gotta not let the emotions take over. Come on, long. Come on. Come on. My goodness sakes. Nobody wants to buy on a Friday? What do you mean? Russell 2000 buying on a Friday? We got 2,000 stocks out there you guys can pick from. Buy them up. Buy them up. Okay, now we can rally. Let's go. We're bottoming out here. We've had plenty of downside. We need some rally now. Okay, big boys, step in. Turn on the gas. Come on, BlackRock. Buy. Come on, State Street. Buy. Come on, Vanguard. They're like, no, I don't want to. Not yet. Not yet. Land's got a long position. We'll wait till he gets out. Then we'll go. These markets, they know you in person. They know who you are. They know you've got a position, and they're like, I'm not going to go long until he gets out. Once the minute you get out, bam, that's when the market takes off and goes, because they know what you're doing. They know just you personally. They know you. And they know you put a stop right there. So they're going to come down, take your stop out, and then go, just to piss you off. Sometimes you feel like you're the only guy in the market, just you against these little ticks on the screen, and they know what you did. It's like, I'm the only one here that they know exactly what I just did, and they're just not going to let me make any money. There we go. Finally got it back up into the green. Now you could roll again if you wanted. If you put your stop in too quick, you get stopped out just as it wants to turn. But you could roll again right now. You could put in an order, take just, if it comes back and stops you out, you put one in. Depends on how conservative you want to be. Because it could come right back down, stop us out and go. But it looks like it wants to go. Come on, buddy, keep going. But you could roll. If you rolled, come in here, put your stop at break even. And that would be a single. And then that would take it off and you'd roll to the next one. But now we're long with two. So we got many choices at this point. You're in the money, so you can come down here. You can start, if this market goes, you can start doing you could just shoot for your goal. You say, well, I'm happy with $500. So you set your $500 goal in there. So there's 500. So you set your 500 goal in there, and if it just goes up and hits the 500 goal, you're happy. If it comes down and stops out, we're going to have to roll one more time to the downside. But we got our roll in there. We put our stop in to roll. It went up, hit that blue line, because everybody thinks that's important, that blue line. So it went up and hit the blue line, which is the average, or the VWAP, and it bounced off that. Now we're going to come down, stop us out. You rotten little bugger. Or did I not put it in there? I thought I put the roll in there. Maybe I didn't put the roll in there. If we'd have rolled, we'd be out right now with only a single contract. What am I long? I'm long too. Let's roll. I'm not going to think this thing's going to go too high. Put the roll in. Come on, buddy. Just push the gas. There we go. Now you're like, good thing I didn't roll. I'm so smart. I didn't roll. Come on. Go up there. Look at the MACD. We're on the back side. This thing's, it's green. It wants to go. It wants to go. It's just being lazy. What a lousy market. Sometimes you just get caught in a slow, dead market on a Friday afternoon. Well, it's Friday morning, so it should go. Fridays are usually good days for me. I usually have $1,000 days on Fridays. Come on, Christmas tree. Pay off. It's Christmas time. Come on. Let us make some money. Come on. Come on, BlackRock. Come on, BlackRock. Buy, buy, buy. So I can make some money. Come on. My goodness sakes. Well, we just got rolled. Okay. Well, that's what we do. Edit. 1. Kill. Delete. Edit. Change. 2. Okay. So where are we going to... This thing comes down, breaks this low, previous low. That's where we'll take our next long. Then 1690 would be a bouncing spot. So we take a bounce there, a bounce there. We're going to go in with 2 more. 1, 2, 2, limit, and we'd put another one on there. The worst thing is when this thing keeps coming down and you're like, I'm going to do Lance Christmas tree. That's a great idea. And then it starts going down and it never does let you roll. That's where it gets ugly because it just keeps going down, down, down. You caught a trend in the wrong direction, baby. Like we've done today. But at least today it's choppy enough that it's letting us roll. When it doesn't let you roll, that's when you get your hiney handed to you. And if you don't get out, when you get the opportunity, it's bad news. That's when you blow your account up. This is a dangerous strategy, guys. It's not, I mean, it looks fun. And it works out really good 99% of the time, 90% of the time. But that one time it doesn't work out, you got to be smart enough to cut your loss and walk away because it can really build up to a nasty position. Because especially if you're doing the advanced one where you're doubling to bring your dollar cost average up 50% each time. This is how people blow their accounts up with this strategy right here. So it comes with a warning. Man alive. This market. We picked the wrong direction, didn't we? All right, touch it, touch it, touch it, take it, touch it, touch it, touch it, touch it, and rebound. Touch it, touch it, touch it. I know you want to. There you go. Now go up. Now go back up. Don't keep coming down. No, no. Come on, baby. Now rally. Rally, 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 rally. You made your Wyckoff spring. That's the Wyckoff spring right there. Now we need it to go and not just turn into a downtrend. Got to move my big arrow. Come on, motivation. This is my motivation arrow right there. Maybe we won't be quite so motivational. There we go. Okay, get back up there. 1, 2, 3, 4, 5 bars down. 5 flat red bars. Was the market being stupid? I mean, was the projector thing being stupid? Okay, we're sitting right there at the previous low. Morning low. Right there at the morning low. We'll come down and touch that thing. Spike it just to prove it can. This is where we'll oftentimes see it rally, but once it breaks the previous low, if it closes below, that's where we see the market start to fall too. We're down $170 right now. Come on, we need a rally. We need a rally. At least it's been letting us roll. Lazy market. Well, I will say, if you would like to have the documentation for the Christmas tree and for Balaam's ladder and all the information about how this thing's good, bad, and ugly, you can get it in my book. Stock Market Playbook of Strategies has the Christmas tree and Balaam's ladder in it. I will also say, I think in the December issue, we have an article about Balaam's ladder and the Christmas tree. Because it's Christmas, right? The December issue should be about the Christmas tree strategy. So I think the Christmas tree strategy and Balaam's ladder are in the December issue of Pitt News Magazine. Come on, baby. Rock and roll. We're ready to go up now. This is your Wyckoff spring. Now we need to go bullish. It's being lazy and quiet and tired. It's trying to go up. Now, when you roll, you have to also take into consideration that if you get a little nervous like this, you don't have to wait for it to be a profitable roll. You can take a small loss. You can come in here and you can say, okay, if this thing breaks down, I'm going to take one off right here again. And it's a small loss, just like any other trade. Okay, you got stopped out. Okay, you take a small loss, and then you look for your recovery. But, oftentimes you wait for it to be a profitable roll. When you're trading the strategy, it doesn't have to be a profitable roll. That's just optimal, right? So you don't lose any money coming down the whole trend. Just maybe a few commissions on your way down. But if you can, if it lets you roll with a little profit, you can even cover your commissions. But if you get a little nervous, like right now, we put this order in, we just got stopped out with one contract. Okay, we took a little loss. No big deal. All right. We're trading the strategy. We're trying to be careful and cautious, and we may just give up on this whole rally thing idea and have to get stopped out. But at least you didn't wipe out your account doing it, right? Nothing wrong with taking a little loss, because if the market starts to go, you can always, you can do your strategies, get back in, add on, do a little pillaring and pyramiding, do a little castling. But right now we need to catch a trend. We need to get a market to move. We can't make money if the market won't move. It's been going down. It's like, Land, why didn't you take the short position? Well, because I thought it was going to go up. That's why I didn't take the short position. I thought we'd come down off of this rally, right? Up, down, come down into the 50, 60% level, turn, start to rally once again. Well, it didn't. So we started to trade the Christmas tree, and we got caught in the downtrend. But after all that market went all the way down. We were long that entire thing. We've only lost $100 so far. We're only down $100. So it's just managing your position. I guess this was a good example of getting your hiney handed to you. $100 isn't bad. Just keep rolling. We don't want this one to be 2 now, do we? Because we added wrong way. There we go. So that's a new long position that would double us up once more down there at the 1690 level. We try to take a 2 position. I've got my parachute stop down here. Those of you who've taken my class, you know that I always trade with a parachute stop. What's a parachute stop, Land? Parachute stop is, what if my computer crashed? What if I had an internet went out? What if I got the blue screen of death on Microsoft Windows? What if? I had a buddy who was trading, and his daughter come running in, had a nosebleed, didn't have a parachute stop. He jumps up just like any good father would do, ran in to try and help his daughter with her nosebleed, came back and he's down $600. It was a $600 nosebleed because he didn't have a parachute stop. He's like, well, I'm sitting here. I don't need a stop. I'm just sitting here. I don't trade with stops. Who uses stops? Not me. Use your stops, people. Even if you're just sitting here like this and you're doing a strategy, you got to have your parachute stop in there. You never know when you might lose internet connection or you might lose something, and you don't want to have a position on that could come down and just wipe you out, take out $37,000 out of your account because the market dropped like a rock while you were fighting with trying to get your internet back turned on. That's why you can call your broker. Always keep your broker's phone number close at hand in case something disastrous happens. Now remember, most of us have these little things. You guys have one of these little cell phone thingy? Most of us have these. I don't know anybody who doesn't anymore. These things usually have, like mine has, if I come in here, has a personal hotspot. So I can hook my laptop up to this. So if I lose internet connection to my desktop system, there's been a couple of times where I've connected to my iPhone to get back to internet. So a lot of people don't remember that, don't think about that. They're panicking. They're like, oh crap, the internet just died. What am I going to do? Hook up to your cell phone and go back in and manage your positions. You can do that. But if you get the blue screen of death from old Bill Gates, you're in trouble, right? Your computer dies. So that's why I have a parachute stop. I always have a parachute stop. So if I'm long 2, I got my parachute stop for 2 down here in case something goes haywire. I can It'll stop me out with a loss, but at least it won't wipe my account out. I've made mistakes like that where they've actually made me money. Those are rare, though. Usually it goes against you. Murphy's Law. Look at this thing. Gee, many Christmas. Come on, buddy. Come on. Come on, Main Street. Bye, bye, bye. Bye, bye, bye. Yeah, market doesn't know what it wants to do. I know what it wants to do. I mean, I know what I want it to do. I want it to go up. Come on, a little bit. Can't you go up just a little bit? My goodness sakes. We've been in the drift pattern forever. Look at this drift pattern. I mean, this is a one heck of a drift pattern. At some point, you think, well, maybe it's not a drift pattern. Maybe they've given up on this short position side. Let's turn off the MACD. And let's turn on the accumulation. They're down in the accumulation zone. Starting to pull up a little bit. We're getting some divergence there. That's positive news. We got lower lows in the market, and we got higher lows on the indicator. That's divergence. So now, come on, guys. See the divergence? Look. Oh, my goodness. Well, we got divergence. At some point, this thing's going to turn and go back up. We're going down through an entire Elliott wave pattern on the way down. Look at this. That's so ugly, though. Let's call this drive 1, drive 2, drive 3. Two little A1. There's our little drives inside. So we're going to call these our 2 drives inside of our first drive. There's our second drive. There's 1 drive, 2 drives. So there's 3 drives into our second drive. So there's the second drive. So there's our third drive. Gosh, 1 drive, 2 drives. Are we in the third drive of the third drive? My gosh, we've ridden this entire Elliott wave down. And it's breaking. It doesn't want to let us roll either. Where's our next area of support? Right there at the pivot point. Where's our next pivot point? Oh, way down there. 1680 is the next pivot point. And the other one is right there at 1690. That's our pivot point right there. So it came down to the pivot point. So let's pivot on the pivot point, buddies. Come on, let's do that. Should we pivot on the pivot point? There's nothing. There's nothing but blue sky below. There's nowhere for us to blue sky. Oh my goodness. There's nothing but blue sky. It's not going to let us roll again. There's nothing in between here. There is no area of support, no resistance, no nothing. The only thing we got is the possibility of a Fibonacci projection. So we're going to project here. 175, 200 would be right here. Making me cry. 2, so we'll go back to trade. 1, 2. Why did I decide to teach you the Christmas tree today? I guess because I wanted a bad example. A good bad example of the Christmas tree. Come on. It's not going to give us a chance to roll it, is it? 1, 2, 3, 4, 5 flat bottom red bars. 1, 2, 3, 4, 5, 6, 7 flat top red bars. 1, 2, 3, 4 flat top red bars. 2 flat top red bars. 3 flat top red bars. It just wants to drift lower. Drift down. Does not want to retrace. Complete Elliott wave all the way to the bottom. Market can stay irrational longer than you can stay liquid. Come on. Push on up there. No, you don't want to? You want to go down one more? Oh my goodness. There's another little flag formation right there. It's a bearish flag. Running out of things to say. Except for we're getting our hiney handed to us here. Oh, come on. Are any of the other markets doing anything at all? I was going to go trade gold and crude oil today. Then we got stuck in this Christmas tree. Boy, it's tired, isn't it? Tired Friday. It's got to rally a little bit at some point. Come on. My goodness sakes. 3 whole Elliott wave drives all the way down. Chop, 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 all the way to the bottom. 3 drives. Come on. Patience, Land. Have patience. Work the system. Work the system. Work the system. There's going to give us at least the chance to roll it if we wanted to. But you know what, guys? We got our 2 long. This could be the turnaround. This could be the bullish rally we've been waiting for, but my patience are shot. We got our money back. We're $47 in the green. I am going to take that as a big, huge, massive, monster, successful win. $50. Is that what we got? 47.
As we conclude this video, take note of the skill, patience, and discipline that define a master trader. This session is more than just a trade. It's a masterclass in adapting to the markets and emerging successfully, regardless of the challenges encountered. Stay tuned to Pit News Magazine for more insights and masterful trading strategies, where you've just witnessed firsthand why Mr. Turner is revered as one of the leaders in the trading and education community.